Yeah, hi. Hi again, Kakai. How you doing?
Doing very well. How about you?
Yeah, lovely. And again, great job on the putting together the virtual asset bill for, the draft for Kenya. And I think you've done a lot of work. I've gone through the draft, right, as you shared with me, and I thought it was like really comprehensive. And it makes me just want to start from the simplest question, and that is why I'm on this call with you, really, just like understand a few things. And I have some questions regarding a few things that I saw in there. And basically, the first thing is how uh, what is the process of drafting this bill like? Because I saw it, I think the thing is like about close to 50 pages long, what you shared with me. And I think even depending on the font size, it could be longer than that. And is this something you draft from scratch, or did you speak with, or did you use maybe some bills that exist already somewhere else in places like, say, Japan? I see the mention of Japan, South Africa. Just talk me through the process of putting this draft together.
Yeah. So, number one, even way before we started drafting this bill, we talked to a bunch of stakeholders. We talked to guys from Binance, we talked to guys from Malco, Botany Pay, Yellow Card, and all. So some of these guys, you understand that they're already licensed in our jurisdiction. Some of them are licensed in Singapore already. Some of them are licensed in South Africa already. And for them, they gave us a list of bare minimum. The list of bare minimums is like they were like whatever structure the bill takes. Uh, Primarily, we want these following items covered. Item number one, we want licensing classes to look like this. Item number two, we want consumer protection on the bill. So they were very clear. Item number three, and now they say that look, we're already licensed in these other countries. We want a bill that allows our compliance officer as a country, as a company, if we have one compliance officer, he or she can easily adapt compliance frameworks for both Kenya and various other countries in which we are operating.
Yeah.
So
All
a
right,
bill
great.
that
Okay, right, please.
caters for the very that makes it easy compliance wise, given that some of these are multinationals. So how is it to comply? So with that background, we looked at various jurisdictions, as I was telling you earlier. With that background, we looked at Japan, Payment Services Act 209, Singapore Payment Services Act of 2019. We looked at the markets in crypto assets, MICA of Europe. We looked at the French Digital Services Act, DSA. We looked at the Cayman Islands VASP, Virtual Asset Service Providers Act. We looked at the South African VASP Act and various other regulations. I think that, I mean, if I have time, I'm doing a series of webinars, so I'll be referencing those comparative analysis. So some of these stakeholders specifically referred us to those jurisdictions that they already incorporated and to those jurisdictions that work for their businesses. So in us, even before we drafted the bill, number one, we had bare minimums and we looked at several regulations. And we started piecing together the bill. So basics, of course, number one, we start with taxonomy. All of you need to be on the same page, whether you're referring to them as digital assets or virtual assets. For me, it's just semantics. By the end of the day, when the rubber hits the road, when you go to classifications, virtual assets, what do you intend to classify as virtual assets? Number one, will it include security tokens? Will it include asset reference tokens, that is real asset tokens? Will it include stablecoins? Will it include, so they were very keen on classification. So
Yeah.
the first step, the bill is understanding one, those bare minimums, and number two, taxonomy, understanding what assets do you intend to classify as virtual assets. So we're very clear we want to classify these assets we refer to as cryptocurrencies. So those are Bitcoin, Ethereum, whatever. So just virtual assets. Then we have NFTs. Then we have real world asset tokens. Then we have stablecoin. And we were very clear that things like e-money, electronic money, and all that are exempted from that classification, non virtual assets. Number two, we also had to be on the same page on what we wish to refer to as who is a virtual asset service provider. The person who is the license holder in this case. Do we intend to license traders? No, we don't want to license traders. These are consumers. Who is a virtual asset service provider? So they are very keen on that classification. So number one, that is an exchange. That's a virtual asset service provider. Number two, an on-ramp, off-ramp service provider. Number two, a custodial service wallet provider. So we were very deliberate on that because a non-custodial wallets, given that consumers custody their own assets in that case, and non-custodial wallets do not fall under that definition. And this is heavily borrowed from the comparative analysis we did. So custodial wallets and guys who do payment processing using stable coins. So stable coin payment orchestrators and processors. So that is where we started from. So you had asked what the process of starting the bill. I just laid the foundation of where we started from. We started from a list of bare minimums. We went to a comparative analysis. Then we went to taxonomy and classification. Yeah. And then, of course, we proceeded with now the text of the draft, aligning on various sections, which I think you wanted to ask about. Yeah.
Right. That makes sense, and I love that you talked about what you want to classify or what do you classify as digital assets, and who is a digital asset service provider or virtual asset, as I think that's the word you use, virtual, and that makes me want to ask, right? And honestly, the first question, or basically the first question that I had here that I had written out is about, non-custodial wallet, self-custody, right? Because I didn't see a mention of that in the draft at all. And how are you thinking about that? Is there a reason why? I understand that maybe because of the nature of that market, it is hard to like follow, but my where I stand is that my view is that regulators globally eventually would want to even get a hold of that market, the non-custodial market, and we're already seeing some movement in EU, for example. There is a story in DL News that I saw a few days ago that talked about how the regulators in the European Union are looking to, rein in on self custody, right? And basically, they want to ban the use of self custody and all of that. And I feel like just given the fact that there is a global drive towards harmonizing crypto regulation, is that not something you should be considering?
Yeah. Yeah. In addition to your question of non-custodial wallets, I'll throw in two other things and address them at the same time. Decentralized finance, or rather decentralized products, so extremely decentralized DeFi products and DAOs. Because there has been a conversation around, and a lot of regulations we've looked at, apart from the recent developments in MICA that want to look at DeFi and the US regulating of decentralized entities. And if you look at the first text of markets and crypto assets, yeah, to some extent it exempted decentralized DAOs and decentralized solutions from regulations. And now that also included non-custodial. Most of these legislations we are looking at, their text will be. The reason for that is simple. What usually is the premise of regulation? The premise of regulation is consumer protection, right? And why you would want to regulate a custodial service provider as first priority before you figure out the infrastructure, because regulating a DeFi solution and a non-custodial solution is an infrastructural and compliance headache. So, but before you get there, you need to understand. Go to the low-hanging fruit, which is a custodial service provider. Why? Because they are holding custody of consumer assets. Given that they're holding custody of consumer assets, that means if they go bankrupt, and the whole section of bankruptcy, or if they collapse, or if they are wound up, consumers face the risk of losing billions of dollars of investment there. That is not the case for non-custodial solutions
Right.
to some extent. So the idea of first of all going for, because these are uncharted territories. Nobody has
Mhm.
developed clear regulations on DeFi and custodial and the non-custodial wallets. So given that you had a short timeline, also strictly speaking, we do not want to get into that. So we wanted to focus on what can we deliver to Parliament by end of this month or by 9th of February. So given that
All
there are
right.
already clear frameworks on custodial, there are risk parameters around custodial service providers, it was easy to develop regulations fast that then we can let the big boys in Europe do regulations for non-custodial wallets and DeFi. Then probably we can see how we can adapt it.
Right. That makes sense to me. And I see that you are also like Nigeria, the direction Nigeria is taking, and I think even pretty much like the direction we are seeing in South Africa. You're designating the capital market regulator as the entity responsible for regulating or issuing licenses for virtual assets in Kenya. Is there a reason? Is it just because that is why it's what we're seeing elsewhere, or is there any specific thinking around that?
So
I mean, just to provide a little background, I know that there have been one of the things that you mentioned initially. I think last year when we spoke was that there has been no, should I say, regulator trying taking responsibility for this. But it then seems like you pushed it down their throats. Did you have conversation with them? And did they indicate willingness to take it up?
so between the last time we spoke and December 2023, what happened is Capital Markets Authority. So we push it to the CMA for two reasons. Number one, they front ran us and amended their Capital Markets Authority bill and extended the scope of their mandate to digital assets or virtual assets. Even though the amendment and the wording of that amendment was shallow, they seized the mandate of regulating digital assets by doing that. So as we speak, there is regime to regulate virtual assets as a bill proposed in Parliament, but it's not as robust and as muscled up as the bill we prepared. So the reason we picked capital markets is because we do not want to create a tough war, a push and pull. We say, okay, given that these guys, as a regulatory agency, have already seized this mandate and moved ahead to try and regulate, let us just put them on our bill and have them adopt our bill and seize that mandate. So reason number one why we put capital market is because of that simple. Number two is that we were juggling several options. So number one, we had the option of setting up a whole new entity that would be referred to as the Virtual Assets Regulatory Authority, VARA. But our countries that are cash, because we are now focusing, we looked at several factors. These are multiple engine an engine with multiple knobs. Number one, our country is at a cash crunch right now. Setting up a whole entity means you'll have to designate that entity, create a budget for that entity, hire officers for that entity, hire the hiring process, the setting up, the infrastructure, and the setting up of everything. In Kenya, historically speaking, as a legislator and as an expert in policy, minimum 3 years. The business community are people who are fundraising and they want those licenses fast. And the minimum 3 years, I'm using that as case in point being the Data Protection Act in Kenya, which came into force in 2019. It set the office of a person called the Office of the Data Protection Commissioner. Do you know how long it took for that office to be physically set up? 3 years. So the law was passed in 2019, but it never became operational for 3 whole years. So 2019, of course, COVID contributed the delay, but yeah, 2019, 2020, and 2021 is when the first officer was appointed. So there's a whole lot of logistics and administrative costs and acrobatics and whatever word you want to use that goes into setting up a new office that we were also trying to avoid. So it was easier for us to just give that mandate to an office that has mandate to regulate security-like products. And given how virtual assets look like, they have security-like characteristics. I'm using securities loosely here because I don't want them to be classified as securities per se. We want them to just be classified as virtual assets. But the level of experience and interaction with the industry players CMA has had would, if we're ranking them in a class of which regulator is best placed to regulate virtual assets, it will be them. Because they already exchange list, already regulate commodities in the commodities market, they already regulate stocks in the stock market, they already regulate exchanges listed in the Nairobi Stock Exchange. So it's easier for such a regulator to do. So that is number two, how quickly it was to implement. I'm saying it was either the option of setting up a whole entity which will take 3 years to implement, or doing it with CMA, which is short term. And number three, one thing I want to add, and which you don't point out, is that as much as we have set up CMA as the primary regulator, we have developed a very innovative more sandbox called the Joint Virtual Assets Regulatory Sandbox. The reason why we came up with this idea is simple. We want a one-stop shop that any person who comes into the country to set up a virtual asset product can just come and set up on the sandbox without having the headache of knowing who to deal with. This is very, very important for two reasons. Reason number one, as much as CMA regulates security like tokens, some of these virtual assets like on-ramp, off-ramp service providers, stablecoin payment processors, some of the operations they do have elements of payment processing and interacting with the banking industry, and things that have CBK like Central Bank of Kenya like regulatory mandate. So to some extent, they would have ended up caught in a situation whereby they're issued a license by one entity, but when they move to operation, the central bank tells them you do not have a payment service provider license. So the FRC, Financial Report Commission, tells them they don't have an AML or CTF clearance. Or the Directorate of Criminal Investigation tells them that they do not, they have not cleared, they don't have clear anti-terrorism policies and CTF policies, things like that. And this happened in Walco recently. So to cure that mischief whereby you have been issued a license by regulator number one, then when you launch product and go to market, regulator number two stops you. We created a joint regulatory sandbox. This would mean that as much as CMA issues the license, all applications have to go through the sandbox and be vetted and approved by all government agencies that might be concerned or might be affected by such a product. So that by the time you're getting the license, you as Mariblock's exchange are guaranteed that if I launch this product, no other government agency will come after me. Man, we're in Africa, Sean. We're in Africa and you understand the mischief we're trying to cure here. We're trying to cure the mischief seeking and gatekeeping whereby you have a license. Then somebody else comes and tells you, look, you did not come to my office and see me. Then you go to the office and see them and clear with them. Then another officer comes and tells you. So that one-stop shop is something, an innovative model we came up with to cure that mischief of overregulation and the confusion and back and forth between multiple regulatory agencies. So as much as CMA will issue the joint sandbox will have all concerned regulators that regulate tech. So there will be CBK there, there will be FRC there, there will be the DCI there, there will be the ODPC. So that at no point will you ever be stopped when you're operating at the market and you have the license. No one will ever stop you and revoke your license because you'll have checked out with everyone. And I'm making a particular reference to the recent events that you saw happen last year, August, September, around WorldCoin, where they were licensed by one regulatory entity to go to market. Then, unfortunately, they thought that was sufficient enough. Then, unfortunately, for one reason or the other, they ended up in a situation where another regulator says they have not satisfied the requirements. So you see, if such a solution was cured by having a one-stop shop whereby a foreign entity like that will just come through this one-stop shop, and as long as this one-stop shop has cleared you, you're not in such a scenario. That will go a long way into attracting capital into the country. And the primary goal here is to attract investment into the country, to attract capital into the country, to create employment opportunities, and to make Kenya a crypto assets hub. So that mischief had to be cured.
All right. Yeah. So that is great. And I mean, I didn't, and I was going to come to point out to that point of like that joint sandbox, right? I thought it was really, it was a good idea just from what I was reading, but then the context you've provided even makes it sound all the more interesting. And is I just to ask, is there any other country that has that model of, having that where every application goes through a sandbox, or is this something that we are seeing for the first time potentially in Kenya?
One thing I can tell you is experience is the best teacher. Other countries have sandbox, but they don't have a joint regulatory sandbox. Based on the
Right.
experience, one of the products, or WorldCoin in this case, was hit last year. It opened our eyes to innovate. Yeah. So experience. I think that was what do they say? Necessity is the mother of invention. It was
Yeah.
a
Right.
necessity, so that when Coinbase comes to Kenya, or when uh, whoever, when Coinbase comes to Kenya, or whatever exchange comes to Kenya, they're not caught up in the webs of back and forth across government agencies.
Yeah, yeah. And I see that the sandbox is very, it's kind of like, from what I see, it's like the biggest, most important part of this setup, in a way. I mean, just from what you've described, right? And I had like a few questions from there, but I think you touched on them just while you were, because I had questions around, because I know you had like sections around the objectives of the sandbox, the functions, the power, the composition of the sandbox, and the sandbox and the committee. Uh, but that said, on the composition and the committee, right? You did say something, and I was going to ask you before, that what is the role of the CBK in this, but I think you have embedded them into that place, and I think you have like this five regulators, financial regulators. I know they have like this kind of annual meeting. I know the Capital Market Authority is one of them. CBK is one of them. I think your pension authority, the insurance authority. I can't remember the fifth one. I think maybe the guys in charge of SACO. I don't know. They are all,
Yes,
and
that's
they had made the move. So I guess I want to know: have you had conversation with these guys, others guys that you are like? Are they on board this journey?
so. In terms of conversation, I can go back to the parliamentary hearings that happened. Sorry, I keep referring to the
Yeah,
WorldCoin
yeah,
incident
I,
because I
I
think,
get that, but like I'm just talking about these individual
or those
regulators.
individual regulators. In terms of individual regulators, we've already had conversations with the CMA, because the CMA already have a sandbox. But what that sandbox is not, it's not a joint regulatory sandbox. We've already had
Mhm.
conversations with the NIFC around the potential of having that sandbox. So NIFC is Nairobi International Financial Center, whose mandate is to attract capital. The CMA is the Capital Markets Authority, who have a sandbox, but it's not a joint sandbox. So those are the two regulators with agencies to whom we've dangled the idea of having a sandbox. Other regulators, we've engaged them, but we've not floated this idea yet, and that is why we wanted the text of this bill to be ready in writing, then back it up with a policy paper. So the next phase of this bill, and I thought I saw you uh, on my email, you saw my calendar of activities. So that is the next phase of this. So after I engage these regulators in the next 1 month, I will be able to come back and tell you, look, I talked to these guys, and this is what they think about some.
Lovely,
The
lovely.
intelligence about the contingency, or the good thing about it, is that they already have something they call a joint financial sector regulatory forum, which I appointed, which is just ceremonious forum that they meet annually to discuss the activities and issue reports. But now, dangling this idea of a sandbox before that forum will allow them to come fully on board. Because even from the forum meeting last year on November, I think 17th November 2023, Gazette notice that they published, they very much made it clear that they want to jointly collaborate.
Mhm.
They want to jointly collaborate in regulating digital assets. And I will share
Yeah,
with you that, just remind
you,
me, the 17th
you,
November um,
that
notice
was the
published.
second time they were saying that. Actually, that was the second time they said
And
it
the second
first
time,
in 2022. We covered that. They said it again last year, and I went, Are you going to keep making this like an annual announcement?
so what
But
did we do? we gave them a vehicle through which they can jointly regulate. So
Right.
that is the reference point. Like you guys have said twice, two times you've told us two times that you want to jointly collaborate, but you've never created the architecture or infrastructure or special purpose vehicle that will allow you to implement these promises.
Right.
Gentlemen, let's take this sandbox and use it. So that is we are giving them. That is what we are
Right.
giving them what they asked.
Yeah, yeah. So quickly, just there is also on the composition of this sandbox, and then I'll talk about the licensing. I have like a few things there. Uh, just I want us to like run through this as quickly as possible, just because we don't want to make this too long.
Mm.
So the composition, I see that you have like the major agencies, regulatory agencies involved, composed of this potential um, joint sandbox, and then you then have blockchain association of Kenya there. uh, I understand that maybe because your team is responsible for putting this together, but as the industry grows, is that going to be, is that not too much power being concentrated? Like I just want to like see that, because I don't know if you get my concern, but is that something that will be considered fair to everyone in the industry in the long run? Or is there
I
any
mean,
provision to like
everyone
uh
is a member of the association. Let's start from there.
say
Everyone
that
in the
again?
industry is a member. Everyone in the industry is a member of the association. So we start with that
Okay.
at the minimum. Number two, the importance of BAK there is capacity building and knowledge development. You understand that in as much as there's this whole ecosystem of regulation of digital assets, we still do not have enough capacity. And there's a very huge capacity and infrastructure gap. And that is where the BAK strictly comes in. Was given that this is a body of professionals, or rather, body of companies and people who are in this business. It is only fair that somebody who looks at things from the lens of a business uh, has a seat on that table, so that they can be able to guide the regulators accordingly. This is very important for two things. Number one, when I started this conversation, I said the goal of this regulation is to make Kenya a digital assets hub, to make Kenya a virtual assets hub, and to attract capital into the country. The only way you can
Mm.
do that is if you have somebody who has a business interest at the table. Otherwise, if every other person is seeing things through the lens of compliance, regulation, and as a regulator, it becomes very hard to to couple that up with business interests. So the
Yeah.
only reason why the UK has that is just to ensure that as much as there's this whole regulatory scrutiny that needs to be met, there's business interests in terms of timelines, in terms of turnaround times, in terms of any other interests businesses might have. It's an opportunity for businesses to directly engage regulators, which has been the biggest headache in our industry for a very long time, whereby regulators work in their own silos. First of all, as regulators. Second of all, as individual government agencies. Then you have blockchain developers and cryptocurrency guys who, for a long time, used to work in their own independent silos. So, by breaking those silos and breaking those walls, we are creating a one stop shop where these people can be able to directly talk to each other in their capacity as sandbox members. That is number one,
All right.
business interest. Number two, consumer protection, because you understand that a very big element of virtual assets and digital asset use cases and all that is protection of consumers.
Yes,
We
yes.
understand regulators can do that to some extent. We understand people like CMA can do that to some extent, but still, it has some elements of capacity building, training, and understanding of what virtual assets, what cryptocurrencies is, what is staking, what is yield farming,
Yeah.
what is all these nitty gritties, and I think that is where also BAK comes in.
So
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 BAK will
so
come.
so so just to like round that off quickly, it means that BAK is there as like the technical advisor
Yes.
in the regulatory process. Makes sense. That
Yes.
makes a lot of sense. Just again, you just on the licensing, that was in part three of the drafts I read. Licensing and registration. I saw that there is the fine and 5-year prison sentence to anyone that is not registered. I want to think, because we talked about non custodial service providers later on. I want to, uh, I'm not sure what you're doing to make sure that you protect such services from being being trapped. There are no ambiguity in what you've written. I don't know if you get what I'm trying to say. And then the other thing that I have here is you mentioned that everyone servicing Kenyans must providing virtual asset services to Kenyans must be registered. So either you're based in Kenya, or you're outside country, serving from internationally, basically. And the first thing that came to my mind was, what if I'm a service provider, and we know that crypto is global in nature. And I'll use Coinbase as an example. I do have a Coinbase wallet, a Coinbase account, although I can't buy and sell on Coinbase because they don't support buy and selling from Nigeria. But but I can use it to receive funds. I can use it to send funds, and then maybe just off ramp it elsewhere. But I can use it as my wallet service provider. So will a company like that still need to, because in a way it's servicing Kenya, although not involved in on ramp and off ramp? I don't know if that makes sense to you.
Yeah, that makes sense. My answer to that is simple. We are now referring to Japan. We do not want a situation where, Sean, you're holding $100,000 in FTX, then it collapses, and you as a holder, because you are holding it from Nigeria, you cannot recoup or save even $10,000 of it. So the only way to protect Kenyan consumers, and you had Japanese was the best case for such, because in the end of the day, after FTX collapse, all Japanese consumers. The only way to protect Kenyan consumers is to make sure, if you're offering services in Kenya and the regulator can flag you, okay, you can offer services to Kenyans underwater or underground, but if the regulator can spot you and identify you and know that you're offering services to 100,000 Kenyans, it's only fair that you're licensed. Because the biggest headache that we face as an industry is consumer protection, whereby these random offshore companies that you're referring to come and do airdrops, they come and do NFTs to people, they come and offer custodial wallet services and very funny exchange services or yield farming products. Then you stake your 100,000 naira or your $100,000. Then after 6 months, they vamoose. So the only way we can make sure, because if you're gonna attract, if you're pivoting towards enterprise and you want to position Kenya as a digital assets hub, then you must have a system, and a very harsh system for that matter, to narrow down and cut out bad actors. And the only way you identify and know an actor is not a bad actor is that they come and declare the interest and get a certificate. They
Right.
pay their security and all that. So that you're not in a situation whereby you're an offshore company collapsing with the deposits from Kenya. So the
Right.
only reason for that is consumer protection, which the bill is very big.
Yes, yes, that makes sense. I mean, I just feel like there are nuances. That's why I brought that up. And you said one other thing, right? I think there's two other things that stood out to me. Uh, Basically, you know, I know that token issuance is not so popular in Africa just yet, but I feel like as we start having more and more of this or real world asset tokenization drive extend to Nigeria, we might start seeing local issuers and all of that. But you said something, one of the provisions there is that an advisor has to get a license as well. I think I saw a comment there already that kind of objects to that. And I just wanted to like understand because I'm not sure. And I thought it was important because we know how important like advisors have been to the crypto ecosystem, especially from like the ICO boom of 2017. How and then they just advise different projects, they raise money, they have tokens, they get money out of this and all of that. So I just want to like understand the thinking you had around wanting advisors to be registered as well. Makes sense.
Yeah, same thing. Look at the stock markets, Sean. And the stock
What is it?
brokers and advice stock markets. Look at stock markets. Stock brokers and guys who provide advisory services around doing IPOs, to some extent, have to maintain certain classes of license, right? or other certifications. So this is very important just to ensure, and it's back to consumer protection. But so number one, tokenization. The reason why we put tokenization is because we foresee a scenario of real world asset tokenization coming. Because I do a lot of real world asset tokenization as in my full time consultancy. So we foresee a lot of that coming into Africa. But for us to guarantee that people who are handholding these transactions are also competent people, they need some form of licensing. And I think that I've mentioned it. It just reminded me that I forgot to expound on that advisory services. We are going to create a list of advisory services to expound that and make it very clear. But there are some certain minimum set of services that will require licensing for various reasons. Number one, some bad players usually use advisory services SPV to either market their tokens or release their tokens into the industry. Then they do a rug pull. Then when you go and do back check, they just say, no, we were just advisors. So you have a bunch of bad players, realize that they want to bypass the licensing regime. They create a subsidiary and a subsidiary which has an advisor to do their token offering and their token whatever and roll out their white paper and do their ITO. And most of those, especially most of that is now because you're operating from a DeFi space. Let's say extremely decentralized tokens. We call them decentralized tokens, but ultimately we know there's a bunch of market makers and the whales who are pushing those tokens to the country, and they
All right.
will do that advisory services. So these are non-custodial, decentralized solutions, probably because we are not regulating decentralized solutions, but they're vigorously marketing their tokens through advisors, rolling them out through advisors. So such kind of bad players, I'm not saying all, because we've gone through a lot of. You're a media person. You've seen a lot of scams that have been passed through advisors, and that is the mischief. I think you see the mischief we're trying to cure here. We're trying to just avoid a scenario whereby 1 billion Kenyan shillings is lost through advice. Somebody was an advisor and they led to a token being launched, then that happened. So I think what I'm going back to do is just expound on what I meant by advisory services. I think by the time I was publishing the first draft, I'd missed out on expounding. But for comparative analysis sake, you can check out Cayman Islands law and Bermuda VASPs. They are very clear on what they mean by advisory services. Also BVI and the French DASP. So it's also something sort of a comparative analysis we borrowed, and we back it up with evidence of people using advisory services to do scams. Because in the end of the day, to protect consumers, we need somebody we can hold accountable.
Mm.
In this case, if you're an extensively decentralized protocol, but you're using advisors to push your tokens into the public, then we'll hold your advisors accountable. That's the message
Right.
you're trying to cure.
All right. Brilliant. Just to just to like round this off quickly. There's one other thing that I wanted to touch on, and that is around. I saw the compensation fund, and then you've talked extensively about, the goal, the consumer protection goal. And I thought, just reading through it, it did well to like cover many bases. And I also noticed, and just lastly, about tax. So I noticed that you tried to include some clarification to like help uh, help bring better clarification to taxation. But I don't think it was so in depth. I think the only thing is that you're saying if you seem to be introducing just one type of tax, which is basically either income or capital gain tax. If you hold an asset for just 0 to 12 months, you're liable to pay capital income tax on that. But anything above 12 months, you're liable to pay um, capital gain tax. And I see that you've done away with the digital assets tax. There is no mention of that in this. So I just want to like talk just briefly the thinking around that decision.
Yeah, taxation. You understand the difference between income tax and capital gains tax is a person who is earning income tax. The fundamental definition of income is this is your bread and butter. This is your daily trade. You're a media person. You've done work for you do PR work for somebody. They pay you income. That is income tax, right? It's something. So anybody who's
Just to
paying income
clarify,
tax,
just to clarify before you move on, uh, Blockchain Association of Kenya does not pay me. I do not work for Blockchain Association
yeah,
of
yeah, yeah.
Kenya. But
So
yeah,
given that you're on record, yeah, yeah. Just to clarify, we're on record. Yeah, taking up does not pay you. This is an independent media audit. Yeah, yeah. So, so yeah, but you get the gist. Income tax is tax paid by somebody who it is their business. They've earned from the business. So mostly, even in the stock or securities market, somebody who buys and sells crypto, a day trader, somebody who buys and sells crypto on a daily basis. I buy Bitcoin today, I sell it next week. I buy it. Is considered somebody who is in the business of making making income on the spreads. That might to some extent be classified, and same thing in the stock market, might be classified as their daily business, and they'll end up to some extent being subject to income tax because it's considered as the buying the active buying and trading of assets can be considered as an income generating activity. So here we are looking at people like OTCs, day traders, full-time traders, hour traders, all those people. And we borrowed this jurisprudence from a certain case in a certain Supreme Court tax case where there was a distinction between income tax and capital gains tax. And that was the distinction. So in that case, the issue was real estate. There's a real estate developer who wanted to pay capital gains tax instead of income tax. And the court told him, look, you're a developer. You're in the business of buying and selling property over a short period of time. There's no way you cannot say that is not your primary income generating activity. So that is different from capital gains tax, whereby somebody who is liable for capital gains tax are long-term asset holders, and the standard day is now at least 1 year. So if you bought Bitcoin last year and you hold it for a year, then you dispose it, you just pay capital gains tax because you're not considered. It's not your trade. It is not you're not in the business of buying and selling. You are an investor. So capital gains tax is usually paid by who? By investors after they have realized their gains. Income tax is usually paid by who? By people who are in the daily trade of doing it. So under Kenyan tax policy laws, usually a minimum 1 year. So for instance, in Kenya, if I'm in the daily trade of buying and selling land or buying and selling shares in the security markets, that will be considered my daily trade and I'll be liable for income. But if I buy land and hold it for more than a year or more than 10 years and sell it, I'm considered an investor and I'll pay capital gains tax when I realize my gains. The reason why
right,
we wanted to make that tax classification is because the original DAT, you remember from our last conversation, was a tax on the gross market value of the assets. It was a transactional tax, and persons will be taxed immediately you transact, whether or not you're making a profit. But the reason why you want to distinguish this CGT and income tax is because these are only taxes payable when you realize a gain or realize a profit. So if you exit your BTC position and make 10,000 naira, then you pay income tax on that 10,000 naira or CGT, whichever will apply. But if you make a
right,
loss of 10,000 naira, then you don't pay any taxes. That is the mischief we are trying to avoid. And that is why
right.
we are against the capital gains. Yeah.
So just to be, I guess we would have the conversation on that. I think that would be like a separate conversation eventually. But just to wrap this up, I know the last time we spoke, you after you had taken the government to the court really, and then I think just later that month in November, you were supposed to the case was supposed to be heard. Is there an update there?
Yes. Unfortunately, the court has kept adjourning and adjourning and adjourning adjourning, just keep pushing it to a further. So we were, we had two cases running parallelly. We had the case filed by Yellow Card, and then we had the case filed by Big. The case filed by Yellow Card was pushed to February of this year. I think 7th February. Our case was pushed to 3rd March. It's cautiously optimistic that we will be able to get that income tax, sorry, that digital asset tax declared unconstitutional on the
Right.
grounds that it's a tax on profit, and any tax on profit is an unconstitutional tax. So any tax on losses is an unconstitutional tax.
Lovely. Just not to prolong this any further, I'd love to dive more into the tax part of it, but this has been long already. And so thank you so much, Kakai, for your time today. And again, it's as always, it's been really insightful. And again, good luck with this. So just from what I see already, the timeline is you're looking to submit this to Parliament within the next 2-3 weeks, I believe.
Yes,
Right. I mean, that is already kind of longer than the deadline you were given, but that is not a problem, right?
that is not a problem.
All right. Okay, great. Thank you so much. I think that's all for me. And thanks and good luck to you and the team at
Yeah,
Block Association of Kenya.
I think as a closing remark, I can just say you saw on my mail to you, I'll be hosting a series of community discussions starting from tomorrow. And I'll
Yes.
just like to extend an invitation to you to be like a host because I love the questions you're asking. And some people, I love the analytical, how you look at it from an analytical perspective and trying to find out the reasoning behind this clause. And I like to extend, just invite you to be a host or get somebody to just help us host and model the session so that you can guide in asking such questions. So you can pick
Oh,
anyone you're comfortable or somebody from your team. And yeah, there are several
yeah,
sessions so you
will be a
can.
pleasure to do that. Will be a pleasure. Just send me the details, and I'm happy to be on it. So
Okay.
I guess